Hello everyone, petar.jacimovic here from analysis.com. I want to say and to say Happy New Year to all my subscribers. I wish you a very good um, I wish you good health in the first place to you and your family, and I wish you the good success also in the trading, and I hope together we will make some very good profit this year, and I'm actually sure of that. So I'm starting already with my trading. This is our first day in the new year, first trading day, and so far I established some positions here. I want to alert you about them, about some short-term perspective positions and some lower time frame perspective, let's say. First of all, as you already know, I pretty much expect USD very lower this year. As long as the QE program is active, and it will be active till, so far I think, the March 2017, we may expect really downward pressure on the USD. The Eurozone, like the Euro rate lower, the US economy is doing quite good, you know, and technically also we can see very good entry levels, because at the end, you know, I use and I teach the students in my mentorship program to use the fundamental aspect, read the fundamentals, and then technically just find the right moment to establish positions and try to benefit from that fundamental view. And you must understand that Forex, what drives the market, and it's actually fundamental. It's all about the fundamentals, what drives the market. You must know to read the future market, to read the volume analysis on the stocks, on the futures, on the gold, on a lot of things there. You know, index, Dow Jones indexes, S&P, and DAX, and Nikkei, and you have a lot of things together and to make the final, you know, say that final decision and to establish position on the currency market or on the Forex. So first of all, we know the euro is in QE program still, and it's a big program, 60 billions a month printing. So you know, buying bonds and so on. So they really want euro lower. Now we can observe technically, we speak technical aspect of the USD. We can see here ending diagonal. This is a classic ending diagonal pattern, and I posted when we was here. I alerted you about that we will probably retest the starting of that ending diagonal, and we exactly tested, maybe missed about 1-2 pips, and then we back to the this area where we got a lot of swing highs, and this here, and there we held for a while. But this is again the holiday action here, and now when we started again the new year, and we started liquidity in banks open, and you know, we continue with that downward pressure, and we broke also this trend line, which was pretty much on, let's say, holiday trend line. And you can see a lot of moving averages here. There is a 50, 21, 100, 150, 200, and the 10, and you hear how well it's rejected here. And this is on the 1 hour, by the way. So 1 hour is basically for short-term trading. The 30 minutes also looked pretty fine. It was a bearish, as you can see, very clean rejection from 200, 150, 100, and backing lower here. In the background, we already saw again ending diagonal pattern. We saw the massive buying climax, the spike here. Remember that day when we went like 400 pips upward in one day, and this is a really how to say that, very forced push here. We know that Euro USD is in big downward pressure, and if we go to the daily time frame, you can see clear distribution here. You can call this is a classic Wyckoff distribution, diagonal Wyckoff distribution. It's also bearish flag, and it's clearly broken down. We went all lower to this swing low here, and then we back almost to this series of the moving averages about where is, I will zoom in that. So as you can see here, where is the 200, this 150 and 100, and price respected that, and we created a lower swing high, and now we're trying to go lower and totally absorb this. And I really expect absorption I don't know what. It's very hard fundamental to change this behavior as long the QE program is active and U.S. economy doing good. U.S. index I expect higher. Also, the one thing about the commodities, I expect the commodities to go lower, and also that will push the USD dollar stronger. So I expect weak commodities, strong dollar, basically, and really I established some positions here. My first position is basically to try to catch about 130, 140 pips. It's just a bit more than the trading range, the average trading range, daily trading for the euro. So I really expect maybe tomorrow to see this area. If we hit today, it's even better. But then my final target is at this stage here. It's actually to catch, since I want to short term to grab profit and exit, and then later on I always can put some new positions and so on. And the risk I put here, it's about 67, 68 pips, about 70. And I'm going here for under 40 and for 300 pips. So I'm trying to take that. I will very soon secure this position. And you see in the daily time frame, this is an uptrust creating from the 10 MA21. So this looks very good on the USD. So again, be careful with any buying. Even if you do the scalp or short term, it's very scary to buy this behavior, this background. Also, the futures market confirms also as well potential good supply coming in, and there is also some options expiring in 1.0800, and there is a 1 billion there in options today expiration date. So they will potentially try to push these 36 pips maybe, but we'll see what will happen there. So this is about the euro, pretty much bearish look here, and I'm really expecting again the continuation, and I expect my targets, which sitting on 100 expansion from this ABC. This is a 100 expansion. As you can see, the 61 point in held, and this is why the Fibonacci is very, very good. You see that how well it's rejected here, back to here, and then right now we are again on the test to see that area. If we break that, we're probably going to this swing low, and then finally we may expect breakout on that, but we're going step by step. The next, what I also established is the pound. Pound is a very weak. It's a very bad data. The whole December we got very bad data. Also today, bad data from Great Britain, and it's very, very weak currency compared to the USD, which we know it's a strong, and it's very good to sell the British pound as long there is no any significant changing in the datas, and so we need a good improvement in the economy to see the United Kingdom, that we see that pound can recover or something like that. So basically pound is very weak, and that fundamental view we can use and trigger technically into some good area and try to benefit from that. So what I did here, it's basically, as you can see, a slope of moving averages here. It's all downward. This is a 1 hour. It's a strong short-term time frame. We are very well below. It's a very strong downward pressure here, and this is something like a redistribution in big downward trend. What I did is I waited the correction. I didn't enter here. This was maybe, I waited the confirmation of the supply, and then I started to establish positions here. So far I'm in plus about 35 pips. The risk in this area was about 55, 56 pips, let's say 60 pips, and I'm going actually for the major, the very big support and swing low. So again, near the 1.4580, and that will be about 100, let's say 70 pips. So I'm going for around 1-3 ratio in this setup. So this risk in my setup is always 0.5 from the account, so I'm risking 0.5 and going for 1.5 in this example. So keeping risk and controlling the risk, and proper analysis of fundamental view, and gathering information from other markets like stock and futures market. You can also use the option market. That intermarket analysis is actually what is the true trading and true professional trading in this business. So you cannot trade to build some good consistent success over some larger term period if you don't understand the intermarket relation and how the different, for example, how the stock reflect the bonds to the bonds yield to the bonds notes, how the index in Japan reflect on the Japanese yen, and how the stocks in Europe reflecting right now in a QE program and what's happening there. So to gather that with information and data from the economic releases on the especially on the forex, together with that and technical analysis is later on to time your entry and to benefit from the fundamental view, which actually drives the market, because market is again driven by supply demand, which is actually created from fundamental aspect, and then technical aspect is just there to that we see visually where how we can benefit, how we can take benefit from that fundamental view, to know where we need to position, where to place stop loss, how much we can let the position to ride, how much when we need to close, and so on and so on. So that's it for this analysis. Again, I'm wishing you a very happy new year, very good success this year. And if you like to learn my method and understand the volume analysis, which is very important to do in intermarket analysis, to understand the fundamental view and how to use that fundamental view which drives the market, how to use the technical analysis to trigger actually entry properly and position yourself in market and take the profit and enjoy the life, let's say that way, and be the financial independent later on. So if you like to learn my method, I really advise you to start my mentorship program, and it's a 7-day course where I teach you all technical and fundamental view and intermarket analysis, and also after the program I'm there with you, and together we work, we talk every day, and so on and so on. That's it. I hope you enjoyed. I wish you good trading, and speak soon.